Hello dear traders, my name is Oleg Prishepa. Welcome to Trading Hero YouTube channel. Let's start our weekly review. So we start as usual from myfxbook.com. Our gain is plus 95%. Our absolute gain is plus 102%. These numbers are different because absolute gain is counted from the deposit we made at the beginning, and gain is calculated considering all of the manipulations with the balance, including withdrawals. And as you can see, we already withdrew $2,400. You can also see the chart performance at the center of the screen, and for this week we earned 0.82%. It's not too much, but still it's better than zero. You can also see all open positions. Mostly we have positions on New Zealand to Canadian dollar and Australian to Canadian dollar, and we'll take a look why we have this situation and what we're gonna do with these deals. Our total performance for January is plus 3.41%. I think it's a good result considering that we have started from the 5th of January and the month is not over yet. So hopefully if we'll close our positions on Australian and New Zealand dollar on Monday, we're gonna reach 4.5 or maybe even 5% depending on the prices where we're gonna close our positions. So let's switch to MetaTrader platform and take a look in the details. How did we trade the last week, and make a brief forecast what we'll be doing the next week. So the recent deals, we as usual start we start our review from GBP to USD on 1 hour time frame. I highlighted our previous week with a gray rectangle, so we can see that on GBP USD we actually had 4 deals. We had a chain of 4 deals, and we closed all of those deals in total profit of around $30. Like 2 deals were closed with profit plus 87 and 2 minus 57. So it's a regular situation when we are covering the losses brought by first 2 deals with a profit, or in some cases like loss like from 3 deals with a profit from the last deal. If we take a look at the technical picture on GBP USD, you will see that we are following the local downtrend. Globally, we can say that this trend is a correction of a global trend on 4 hours time frame. So it's a correction. So we are expecting for the market to break one of the support levels or the resistance levels from the last week, and from this point we'll be considering how to trade. If we're gonna continue our growth, we will be selling after breaking the previous high levels. I think we will even wait for the price to lift a little bit higher up to 1.33 34.65, and here we'll be considering to sell, or if we'll renew our low levels, we will be buying. The next currency pair is GBP to Canadian dollar. Here we can see that finally we have broken this consolidation, and we made a really huge impulse of around 1,100 pips, and actually that was one of the reasons together with renewing the previous highs to open our selling position. We are currently in some small profit in the market, and if market will continue falling to some average prices, we're gonna close our deal with profit, I think near the previous resistance level, or if it will continue its growth, we'll be looking for the place to average our deal near the previous highs. So everything is clear with this pair. Let's move on to Eurogbp. Finally Eurogbp brought us some deals, because if you remember, from starting of January we have no trades opened on Eurogbp, because first of all we were in this small consolidation, and the corridor with the width of 400 pips is not suitable for this strategy to trade, because approximate take profits that we are counting to get is around from 200 to 250 pips. So this corridor is not very big for it, and like finally we made a good impulse around 1000 pips, so that actually like triggered like our bot to enter the trade, and we already closed it successfully with profit, and on the reversal moment we also opened a new buying position. So if the market will continue its fall, we'll be averaging our deal after breaking the previous lows. I want to pay your attention to the historical situation that we have on Eurogbp. It's very interesting. If you switch to a daily time frame, you're gonna see that we are very close to the minimums of the end of 2019, and if you switch to weekly time frame, you will see that we already surpassed the minimums of 2016, and actually if we'll fall down below the minimums of 2008 and 19, we're gonna see the prices of 2016. So it means that for those of you who are who were looking for a good entry position to buy euro to GBP, I think it may be a best like the best time to buy things 2016, and you can take a long-term position. You can split your deposit into several parts and average it if you see that market will be falling, because like sooner or later after this like impulse they will go to some average price. They will consolidate somewhere, because you see this situation when we entered this corridor, it actually was like caused like by Brexit, and like now I think economies of European Union and Great Britain, they actually got used to live in this world, not only with COVID but also with another like type of business and economic relationship that they have after the Brexit. So I think it can be a good position like to buy, especially if you want to like put your money for several several months or even several years. It can be a good entry position of buying because the price is really low. But we are trading short term, so like it means that we're gonna close it as soon as price will grow for like 200 or 250 pips, or we'll be averaging this position gradually if it will continue its fall. So like everything goes according to our strategy. The next currency pair is New Zealand to Canadian dollar. As you can see, we are still holding the deal from the previous week that we opened on the 21st of January, and now we have like a second algorithm that like started to like gaining positions together with the first one, and we have these open trades, and actually we are globally very close to the like previous lows of 2020. If you remember this time when COVID started in February, March, and we had this like movement downwards, and then we turned back, and we were trading in this square, and we are very close to the lower border of this consolidation. So I think that it gives us good opportunity to expect for the market to bounce back, because there are a lot of pending buying orders of like long-term investors and middle-term investors who want to catch this fall. So I think that like if you were not like trading with us and were not like buying NZD, it can be a good time to enter this position, even like with your own trading strategy to make some profit. But don't forget that when we trade, we use averaging strategy. We have a statistic that like shows that the way how we trade, exactly how we trade, it works for like 14 years. And if nothing will gonna change within a policy of central banks of like New Zealand and Canada, the system will be working. But like nevertheless, if you have your own vision, you can actually adjust this this strategy with like your own entry points, or trade your own ideas using this analysis. The next currency pair is Australian to New Zealand dollar. Finally, we started making some deals here, because if you remember, we were in a very long consolidation, near a month we spent in this lateral movement. After we like broke this resistance level, and we entered we sold here, and we closed this deal with profit, and then we also like made a new resistance line, and after we broke it, we entered a new selling position, and we already closed it with profit. So I can see that like globally, like we are at the maybe at the end of this uptrend, maybe not, because if we'll take a look at 4-hour time frame, we are actually in the correction of this like previous like global movement. So so it means that maybe like we can like fall down, and in this case we'll be like looking for buying position, as I think closely to the previous resistance level. If not, we'll be looking for the selling position after breaking the previous resistance level. And let's take a look at Australian to Canadian dollar. We can see that situation is pretty similar to the one that we have on New Zealand to Canadian dollar, especially if we'll switch to 1-hour time frame. We'll see that they are very similar. Like no wonders, because actually if we'll take a look at New Zealand to Canadian, New Zealand to Australian dollar, you will see that like we are actually in the consolidation, and we turned like back after these like movements up and down. We turned back to the same price we had at the beginning of the previous week. So that's why if we'll remove Canadian dollar from NZD-CAD and AUD-CAD, obviously that we're gonna get AUD-NZD. So this is the way how it works. I mean, the trading with cross rates. So that's why Australian to Canadian and New Zealand to Canadian are pretty similar this week, and we also have two open positions, and now we're waiting for the market to bounce back, because like I said, we have the like lowest price now on this currency pair since April 2020, and it makes many potential middle-term investors like put their orders closer, their buy limit orders closer to this price to buy and enter to some middle-term trade. And we'll be expecting for the market to like, if it falls down, we're gonna wait for the breaking of the recent lows, and we're gonna average our deal, and then we'll close it when the price starts bouncing back. If we're gonna grow from this moment, we'll close all of the deals with profit, and we'll take a look where we can sell near the previous highs of the recent fall. So this is the information I wanted to share with you. If you have any questions, feel free to ask me in comments below this video, or write me personally on Telegram. Join our trading strategy, tell your friends about our trading strategy, discuss it, and subscribe on our channel not to miss any new videos. I wish you good luck in trading, and see you next week.